It's Friday, the 4th of December 2020. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. Today's headlines: iron ore prices have hit a 7-year high and the Aussie dollar has surged, sending miners' share price to multi-year records. That's our main story. Plus, Macquarie Group spends $2.3 billion on a US funds management business. Qantas says things are picking up across the country. And new car sales jump, with utes and SUVs leading the way. Iron ore prices have pushed to a new 7-year high, sending the share prices of Australia's big three miners surging. Fortescue ended the day up 13% to a 12-year high, and its founder Andrew Forrest's fortune is now worth around $23 billion. Rio Tinto was almost 7% higher to $112.20 a share, its highest level since 2008, while BHP jumped 5%. The reason for the surge was Brazilian iron ore miner Vale, the main global competitor to the local miners, downgrading its production outlook. It came as data showed factory production in China was accelerating as Beijing invests heavily in infrastructure as part of its economic recovery. The surge in iron ore prices, along with vaccine breakthroughs, a weaker US dollar and a positive economic outlook, pushed the Australian dollar to a new 27-month high of 74.42 US cents. The surge in iron ore exports was clear in October trade surplus figures released by the Bureau of Statistics. They showed the monthly surplus increased $1.6 billion to $7.45 billion during October, as iron ore sales hit a record $13.5 billion during the month. The surging value of exports will have a positive impact on total economic growth this quarter. On Wednesday, the GDP figures showed that net exports, that's exports minus imports, detracted from growth during the September quarter. That is, of course, assuming China keeps buying our iron ore, which is a base ingredient in steel. The spat between Beijing and Canberra hasn't touched the sector yet, and given the importance of Australian iron ore to China's economic recovery, it probably won't. Overseas news first up. Wall Street hit a third successive high overnight. It came after a surprising fall in jobless claims in the world's largest economy. Cases of COVID-19 in the US are soaring, reaching 200,000 per day, and the number of deaths in the most recent 24-hour period hit a new record of 3,100. It may get worse, given last weekend was Thanksgiving and people moved around the country in huge numbers. President Donald Trump, remember him? Well, he released a 46-minute video filled with unfounded accusations of voter fraud in last month's election. It's interesting to watch the lack of attention given to the video. Mr. Trump has a little over 1 more month left in office. And Apple released its list of the most downloaded apps for 2020. And the winner was, well, it's one that I used continually this year, but had never opened prior to the pandemic. Zoom Cloud Meetings was number 1. TikTok was number 2, followed by Disney+, YouTube and Instagram. Locally, Macquarie Group will buy New York-listed fund manager Waddell & Reed for $2.3 billion, upping its bet on growth in the US mutual fund sector. Waddell & Reed has $68 billion in assets under management. After the deal, Macquarie will have around $650 billion in assets under management around the globe. Australia's 10th largest company is pushing further into active funds management. Active funds management involves the Macquarie team picking assets, such as a share in a company, in the hopes of outperforming the broader market. Investors pay more to be in active funds. There was one community-transmitted case of COVID-19 in New South Wales yesterday, the first in Australia for several weeks. The woman was a Sydney hotel quarantine worker. Meanwhile, Federal Health Minister Greg Hunt said that Australia was on track to roll out vaccinations from March next year. Qantas said it will post a large loss during the 2021 financial year on the back of a drop of $11 billion in revenue due to the COVID-19 pandemic, but it expects to be close to break-even for the second 6 months. The forecasts were made assuming international travel will remain closed until the middle of next year. In economic news, home lending hit a record high in October, helped along by the government's Home Builder grant and low interest rates. First home buyers are back in the market and made up 35% of all owner-occupied commitments. New car sales increased for the first time in 2.5 years last month. During November, more than 92,000 vehicles were sold. Helping was the government's instant asset write-off scheme announced in the budget 2 months ago. I mentioned yesterday morning that Booktopia, which sells hardcover and paperback books, was listing on the ASX. On listing, its share price was up 24%, before closing 15% higher. Today, Newey hits the bourse. The intelligence software company is one of the biggest floats of the year, valued at $1.8 billion. And the first big test of Foxtel and Kayo's coverage of cricket, the one-day series between India and Australia, has proven successful. Overall, the series attracted an average audience of almost 500,000, the best ever for subscription TV. That's the Fear and Greed business headlines for today. There's more on all of these stories in today's full Fear and Greed podcast, as well as an interview with Network 10 boss Beverly McGarvey. I'm Sean Aylmer. Enjoy your day.